Tim Knight. I'm going to make you the presenter, Tim. Really appreciate you granting this interview. Look, I've been to your website. Excellent website. You're a believer in communities. So looking forward to hearing your voice. And
this is my voice, if you can hear it.
Hey, Tim, how are you? Great to meet you.
Good morning. How are you?
Good. I really appreciate
Where are you? I'm wondering. Where are you located?
Where do I live?
Yeah, where are you?
Temecula, California.
Oh, good Lord, we're not that far apart. Okay.
Okay, you in Southern Cal too?
No. Up in beautiful Palo Alto, a little dark.
Oh, okay. You're up there with all the techies.
Yep.
So,
yep.
Yeah, I read a little bit about you. You actually had a service that TD Ameritrade bought. So, wow, that was a big victory in your career. Go ahead.
That was my company, Profit.
Right.
PROPHET. Sold that back in 2005.
Nice. So how did you get into the racket, Tim? Did you know when you were 18 years old you were going to be doing this later in life?
Well, I definitely was making tiptoes in that direction. I'm very visual. I've always been a very visual person. I can't draw even a stick figure, but I love looking at things. And I guess the exemplar of that is I'm terrible with names, but I'm really, really good with the faces. But I have always been interested in business, financial markets, even though I definitely didn't grow up in a place that had anything to do with any of that, nor was any of my family involved in that. But I was drawn to charts naturally, and placed my first trade on Black Monday in 1987, and I've been struggling ever since.
Interesting. So that day was your first trade. That is really.
Yeah, I should have known. That was my sign.
Huh? Well, you know, they say, I learned on the floor, they said, actually, if your first trade is a winner, it's bad luck.
Okay, well, then I must be the luckiest person in the world.
Yeah, there you go. Okay, because then people think it's easy. So why don't you tell us a little bit about who influenced you, or are you completely self-taught, or did you have mentors early on, and how did you gravitate to, the type of technical work that you do?
Well, didn't have mentors or anything like that. No, I definitely self-taught, and read. I guess the first book I ever read related to this was Jake Weinstein's How to Profit in Bull and Bear Markets, and that was before that first trade I mentioned. And
was that Stan Weinstein?
Oh, I beg your pardon. Yes, I'm conflating names.
Okay.
Stan Weinstein,
all right.
Yeah.
Okay.
And
I remember.
How to Profit in Bull and Bear Markets, and it's a very simple introduction to technical analysis and charting. And like I say, it was really love at first sight. I have not probably spent a single day since those many decades ago not doing something with charting, but I didn't have any particular teacher or anything like that. The closest I got to an inspiration was a video that pretty much all of us have seen, which is The Trader, 1987 documentary on Paul Tudor Jones.
Oh, okay.
Which was just, to me, mesmerizing.
He says all the big money is made at the turn. So let me ask you this, your handle, Slope of Hope.
Yeah.
How'd you come up with it, and what's the deep meaning in there?
Sure. Well, there's a lot of aphorisms and sayings in the world of trading, and one of them, a common one, is markets climb a wall of worry and slide down a slope of hope. And besides being visual, I'm convinced my mother was accosted by a bear on a camping trip, because I've got a lot of bear blood running through my veins, and I tend to greatly prefer shorting and bear markets, which means 2008 I was the king of the world, and I've been weeping to the heavens ever since. But it's I love short setups, and I just find. I find charting fascinating, but history which is another interest of mine, I find inextricably linked to these wiggles that we look at on the screen. And so I'm
Okay.
those turns that Paul Tudor Jones you mentioned, I'm always interested in those big shifts in history.
Okay. Yeah, so I'm predisposed as well. Learned that down is faster, gravity. And yeah, I've spent some time top picking indexes over the years too. So what's on your radar now, Tim? Are there any sectors, or I know, do you mainly cover individual issues or ETFs in your community and with your newsletter? Are there any things that you're kind of drilling down on here? I actually think that we're putting in some type of high here and we get a shakeout where we might even be able to take out the Feb lows and then have another launch from there. So,
well, since we're looking at my screen, may I pull up a chart?
Oh, sure.
Oh, okay. And this is, yeah, and just to say, quite obviously, this is my website that I've been building for years now, and a big focal point of it is what I call slope charts. Okay. I had mentioned selling profit years and years ago, and the charting platform that I created has been in the course of going away for a couple of years now, and I just panicked and I decided, well, I'm just going to do it again. So I created a new charting platform, and I want to make sure, if I go full screen, I want to make real sure that you can see all that. Is that still all visible?
Yeah.
Okay,
yeah.
great.
So look, you have that rising channel. Looks like it's compressing a little bit.
Right. That was just sort of a default
okay.
symbol that comes with spiders. But you know, it's dull and boring, and nobody looks at it. But I'm crazy in love with the Dow utilities, and this chart here is almost a half a century of data on the utils. And as you can see with my highlights here, there have been some very interesting turning points. The most recent major one, of course, was prior to the financial crisis, and you know, you just don't get cleaner head and shoulders patterns than that. I mean, that's almost comically perfect. But what I like to see is, I always say that, you know, financial instruments have personalities just like people do. They tend, you can tend to get acquainted with their behavior and their nature, and the behavior of this one, it occurs to me there's another top here, the behavior of the utils tends to be, you know, well-formed tops and firm reversals, and the most recent of which I've been obsessing over tick by tick, has been this right here. Now, admittedly, it isn't as clean a top pattern as the 2008 one, but what makes it well worth watching is a couple of things. One, in the broad context of 50 years of data, we are quite close to the top of this channel, so it's rather expensive. And secondly, as a more intermediate term signal, this trend line, which is anchored to that important March 9, 2009 low, has taken a little bit of damage right here. And my view is that ultimately this year we are going to bust that trend line and stay put below it. And naturally, we have to take out the lows that we had seen here. But my view is that, as everybody's focused on FANG stocks, but I think something as banal as the utilities, and this top in particular, is an important harbinger of things to come.
Okay, and is this going to be a precursor for higher long-term, short-term interest rates? Do you feel that there's a strong correlation between, say, the Treasury market and utilities, or?
Right.
Go ahead.
Well, you're a very good straight man, because that's my next thing I could mention. This is the long-term continuous contract on the futures, and as you can see, the recent activity doesn't look remarkably different than the utilities we were just looking at.
Right.
This right here is the same decently formed top, and as you can see, the uptrend is absolutely intact. However, it's vulnerable.
Being threatened.
Yeah, and so a failure, and I'll show you my favorite of all. And this takes so much data; it takes a few moments for it to kind of cobble together all the information. But I'm crazy about this chart, and what it is the S&P cash market divided by the 10-year yield, and I'm just soft shoeing here while it loads because it's a lot of calculation going on. But what it will eventually show you is a long-term chart of those of that ratio, and what I believe is a calamitously important top. So you and I can talk about other things while we wait for this damn thing to load.
Okay. Okay.
Oh, there we go. It is. And the moment I say go, then it's all right. Anyway, here's that very, very long-term pattern, and as you can see here, this goes back to when Richard Nixon was a beloved president, and all the way up, and
the beginning of the bull market, August 1982.
Precisely, and it's weirdly, I was just a little kid, but I remember the TV news was on.
Don't rub it in.
Well, okay, I wasn't that low. But Walter Cronkite, I think it was their lead story, was talking about how the Dow went up. I think it was like 28 points that day. It was huge news.
Yeah.
That it was up 28 points, and that was
when it broke 1,000 or something.
Well, it wasn't even. It was just the market had been in the doldrums for about
20 years.
Yeah, and it was very big news. And so here we can see the beginning of what has been to this day an uptrend, but the threat here, and interestingly, the peak, because we look around. A lot of people say the peak was like yesterday. The NASDAQ was the highest point in human history yesterday. However, if you look at something broader like this, the peak was actually more like July 2016. And we've been shaping this, for some people terrifying, but to me, exciting pattern, which, should we fail, the neckline here and the concocted figure here is 832.45. Should we fail this, I was bragging about the utilities head and shoulders pattern. This one puts it to shame. This is comically good. So should this fail, then the last 10 years actually might turn out to be worth it. But this is what I'm watching with rapt attention, because this there's not many more months to go before this thing either proves itself or drives a stake into the heart of the last 3 bears on Earth.
Did you ever use the textbook Edwards and McGee?
Oh my Lord!
Technical analysis of stock trends. That was your Bible too.
That's next to King James on my shelf. Yeah.
Okay. All right.
I've got a photograph. It's not handy, but I've got a photograph. It's a real photo of me on my honeymoon, and I am, laying on bed asleep with a sheet over me, and the only clothes I'm wearing is Edwards and McGee book on my chest. I mean, that's how I spent part of my honeymoon. So that's very devoted to it.
Okay. So looking at this, potential changes that are happening here, do you follow anything dollar related? Do currencies matter to you at all in your analysis?
They do. I know your listeners are Forex aficionados. I actually in my own charting, the kinds of charts I've got right now are quite simple. They're instruments that your listeners probably wouldn't trade, but they at least give me a bit of a feel for what's going on there.
ETF. Okay.
Yeah. So, for example, and I'm always adding new stuff to slope charts, and Forex data is like a week away. But I've got some ETF access here, and so, for example, one thing I find interesting is the yen, and of course, it's tightly correlated to gold. And so, as we look at the yen here, to my way of thinking, we've got this symmetric triangle, which failed, and we've spent a few trading sessions trying to undo that damage. But I think that this little bounce is dwarfed by the larger pattern at hand, and the fact that this trend line has been broken. So what I would say that based on that is that, okay, the yen's heading lower, and then one could follow, all right, well, gold, and shown here by way of GLD, is in trouble too, which is not great news for gold folks, because they've been suffering for some 7 years now. I mean, this peaked back here in September 2011, and it itself broke a much bigger trend line some months ago, and so even though gold
Wow,
looks
yours goes, oh, your that green trend line goes back to 2004. So
right,
I
and
know a
so
lot of people were looking at the action from 2015, but you actually anchored it all the way back there, which makes it a
yeah, well,
10-year longer trend. Yeah,
you raise a
okay.
good point. You raise a good point. Let me just try that because I don't know what it'll yield. I actually have a feature that draws automatic trend lines here, and I just want to see what this shows. And it's basically obeying whatever the lowest one was. But yeah, if we do that, even that much kinder trend
Yeah,
line has been broken. And let me just give that a different color. But yeah, so you just that's what you just suggested, and that
right.
interestingly, even that more forgiving trend line has failed as well. But the point being that I don't trade. I dabbled in Forex some and did a great job blowing up the two small accounts that I tried and said, well, this is a little too leveraged for me. But I do look at Forex daily.
Okay.
Particularly the yen, and here's the much longer term view of gold by way of the continuous contract, and it's kind of a hot mess. Not much to read there, but I think in the months ahead, it's definitely looking kind of grinding lower.
Okay. Anything on oil-related shares? So there's been some,
Oh,
we have that, being a bear, long-term bear, you must have loved 2015, 2016 when crude was trading 25, and
oh yeah.
what you're thinking here.
Yeah, the famed Dennis Gartman era.
Oh, the commodities king.
Right. It never traded above 44 in my lifetime. That whole bottom.
He's still
So
living.
yeah, and he's still well. If not, they're doing a good job carving him out. So
Maybe it's a cutout they put in.
yeah, but here, here is crude for many decades, and it's I love these long-term charts. They're fascinating. In fact, this here in particular is just its own. This, of course, was the first Gulf War, and it's an interesting example of just how backwards markets can appear, because this collapse here was, of course, when the war actually started, and
Right.
Everyone was just ready for it to go exploding higher because war is bad, but oil actually just completely collapsed. But here we have, over the past 10 years or so, what's clearly a sort of lumbering downtrend, and I'll just draw a lower portion here. I'm more than a little anal about my trend lines, so I got to make sure they're right on the dot.
Oh,
Good.
you're a technical analyst.
Yes, I am.
All right.
I
You
am.
can talk about that. But,
I am indeed. I'm in
some
trouble.
technicians are so anal, they're called technical analysts.
That's
but,
me. That's
all
me.
right. Well, so what do you think? Is this a major failure up here in crude?
Yeah, what I was
Go ahead.
watching very closely was this gap right here, and I was looking at that as a reversal point. And I think between friends we can let me go on that one, because it did exceed that gap a little bit, but it's starting to reverse away. And the key, of course, is this fellow, this trend line right here.
Right.
Now,
Right.
Shorter term, looking at say USO, in terms of what would that price be? I would say a failure of, and we can throw another line down at this gap
And
here.
also, I've noticed like crude made a high about 3 months ago and pulled back to 61 and then made a new high, and the shares didn't do it. So the shares didn't confirm the recent high in crude. You pay attention to, I was taught that shares lead the underlying commodity price, and if they're lagging, that's kind of a negative message, and if they're leading and show more relative strength, you should look to be buying the underlying commodity.
Oh, interesting. So you're speaking along the lines of, say, XOP or XLE?
Yeah, any of them.
Okay.
Most of them did not, confirm the new high that we had in crude. A lot of things, I think the oil shares have been weaker than the underlying commodity, is my point.
Right. I was, that's a very interesting point. I was just overlaying the two of them here out of curiosity. But yeah, you can. It's subtle, but you can see that here that the blue presents the XLE, whereas the black represents oil, and you can see here oil, as you just stated, was stronger than the energy shares down there. So that's hadn't occurred to me to look at that. But to kind of put a bow on the answer, I do think crude oil, in half a year from now will be higher or lower. I think it'll be lower, maybe even a lot lower. I think it's headed for failure.
Okay. Can we discuss FANG and
oh my, yeah,
and NASDAQ? I mean, let's talk about what has the most helium in it right now and kind of what you're seeing.
Well, as you mentioned at the start of the program, I'm kind of in the midst of all these folks. We can just thumb through them. So going through FANG, so Facebook, extraordinarily strong. Even, I would short my own mother if she had a ticker symbol, but I probably wouldn't short this. It's just, I don't know how many bears have been slaughtered by this. I don't touch it. Amazon, I was fool enough to, I monkeyed around with this a little bit, and having burned my hand badly, it's like, okay, never mind.
Don't you love those throwovers, Tim?
Oh my Lord!
Where you could trust a wedge line forever, and then it blows through it.
Oh sure. I mean,
this is what I teach. When you're in a throwover phase, you just wait for the throwover to end and it get back inside the channel, and then you have a signal. Is that kind of the way you trade throwovers that make people throw up?
It sounds a sensible approach, and it's funny because you and I have never met, but just by looking at my lines, you and I are kind of having a conversation here. Yeah. Because I'm able to express with a simple line things that would take me a long time to do poorly otherwise. And indeed, like roundabout here, if you and I beamed back in time and we're trading around here, it would seem obvious, in quotes, that we should short the devil out of this thing because it had peaked. Right. And, how far has it gone? It's gone,
20%
it's just, what is it, $700? I mean, that, that just shows you how insane that is. So, like right here, Amazon was around $1,100, and it seemed insanely valued, completely crammed against its channel, like, sell your house and buy puts on it. And the thing went up about 65% more in the span of 7 months. I mean, insane isn't strong enough a word. This thing is, and, of course, I never, ever use arithmetic charts, but if you want to do an article in a newspaper, just get dramatic. Of course, you just show that.
Get your get your compass out. Yeah, we were looking at all these parabolic moves here. I have to bring it up because it is a new asset class. Are you watching crypto? What's your view on crypto?
Absolutely. Yeah.
What do you think?
I watch it with great interest. I've never traded a single whatever unit you want to say dollar of it. But I've been completely mesmerized by this because one thing that captivated me about them is that they seem much better behaved technically than equities because, I don't know, there aren't central banks around the entire planet trying to manipulate these things. And so it actually works out. Yeah, it actually works out that they actually obey the laws of supply and demand like stocks did 15 years ago. Okay. And so with Bitcoin, for example, and I joke about the whole perma-bear thing, but truth to tell, back when Bitcoin looked like this, I had said, I don't understand this stuff. To me, I can't see how it has any value. However, from a chart, this is an incredibly clean, bullish setup. And that's when Bitcoin was like at 1,000 and went up to about 20,000. And I was like, oh, wow, charts actually work with these things. And since then, as they say, I don't have a dog in this fight. I don't trade this stuff at all. But as a chartist, I find it really fun to chart these things. So with the granddaddy here, Bitcoin, we've got this huge range going on, and most recently we had this cute little inverted head and shoulders, which expressed itself with the rip we saw.
And what a great stop hunt! How they took out the Fed lows and then reversed.
Yeah, well, that's where I'm glad I don't trade it, because down here I was saying, well, trouble ahead, because that there goes that support and there's nothing beneath it. But it completely defied that. Different examples that include, for example, kind of the the number 2 fella, Ethereum, and it itself has been banging within the confines of this triangle. And one lesser known one, which got a lot of press at the beginning of the year, was Ripple. The reason it got so much press is that back here, it was reported that the founder of Ripple was worth more than Mark Zuckerberg, which should kind of tell you how beyond crazy things went. So it peaked at 329, and it's ground down to like 46 cents now.
It's Ripple is also a favorite beverage on Skid Row in Chicago.
Ah, yes, I remember.
Ripple wine, right?
Yes, two exits, okay. No waiting. Yes. So yeah, there's poor old Ripple right there. But yeah, I do follow crypto just as a purient interest only.
Yeah, I've never traded it, but I'm thinking at some point it might be smart to own it just because of portability of your net worth on a little thing, a wallet. I interviewed someone that does a lot of Bitcoin, and I said, for guys in my age bracket, was it possible to get a leather-bound wallet to hold our Bitcoin?
Something you made at summer camp.
Yeah.
In leather crafting, but yeah, this is in a way I got my own sort of signal on this, because when this was peaking, when all the crypto space was peaking, many folks wrote me, friends and readers alike, saying, "You've got to open up a crypto account. This is so great." And there's never been any instrument ever where people have been like falling all over themselves, say, "You got to get into this. Yeah, get into this. It's an honest market," and then of course that I don't hear from them anymore because things kind of went quiet.
Well, I'll tell you, Tim, I'm so glad that I pursued you, because I hope you enjoyed your time here, because I certainly enjoyed your looks and your demeanor. Glad to call you my trading warrior brother. The best way for our viewers to follow you is your Twitter handle @SlopeOfHope, and that's also the name of your website and service. And looks like you have a very dynamic community where people share charts, and they post and share their opinions, and a lot of eyeballs working together, which I'm a big believer in.
Right. No, trading is a funny thing, because independently, it's a solitary pursuit. But there are these communities like the one I've built where we can all kind of gather together and share victories and defeats and ideas. And another thing you find on Slope, of course, is that these tens of thousands of charts people have shared, which are neatly categorized. And as I said earlier about the whole Forex thing, there are plenty of currency charts that are in there too. So it's almost all free for the taking. So I encourage your listeners to give it a shot and poke around. I think you'll find some things you like.
Well, good hunting, my bearish friend. And,
well, thank you.
I think there's at least one decent wave to catch here, Tim, into October.
All right. Well,
but
it was a pleasure talking to you, and very kind of you to invite me to your forum. And best luck to us both. I think we could all use some.
Thanks so much, Tim. I appreciate it. Thank you for coming here and edifying our community. So everyone, thank Tim Knight. You could follow him at Slope of Hope. Go to his website, check out his community as a great resource. This guy's one of the best technicians out there. So with that being said, have a great Wednesday. See everyone tomorrow. Good hunting, and most of all, don't just count your pips, count your blessings. See everyone tomorrow. Thank you again, Tim Knight.
My pleasure. Thank you.